points on how to stay out of tax trouble. Today's topic is S Corporation started too soon. And I lucked out with this topic because I received a call this morning just before the broadcast and said, perfect. This story will be great for the podcast. So the situation, as is often the situation with S corporations, a person started a new business and based on their prior business experience and desire to save tax, set the business up as a S corporation right from the start. And first of all, we should say, the accountant will always ask, when you say, I have an S corporation, I will always ask, is it a S corporation filed with the state, or is it another business that you elected S corporation status taxation with the IRS? Those are different things, and we often have to clarify that. And that was the case. The latter was the case. It was an LLC that elected S corporation status. So again, why do people do that? It's based on a belief, a premise, prior experience that is a way to save taxes. The reality is that the form of business you choose does not affect your taxes. However, when a business reaches a certain size of income and some of the income is not attributable to personal earnings, we can escape the self-employment portion or wage tax portion of part of that income. And that's the basic concept behind corporate earnings. Since 2018, the corporate tax rate is less than the combined personal income tax rate if you combine the self-employment and the tax rate. Self-employment tax rate is about 15%, and then personal income tax, let's even say that's 20%. So you can see that the corporate business tax rate at about 20% is substantially lower, and a way to save money in that circumstance. So what's the problem with starting it too soon? In this case, the caller expects about 50 to 60,000 gross revenues their first year. Now, if we take gross revenues and deduct all of the business expenses and starting expenses, we're not talking about a whole lot of net income. So there are two problems right from the start. One is that just setting up and running the S corporation, the need to prepare a separate set of books in addition to what we normally have for self-employment, a corporate set of books, and then filing a separate corporate tax return, which then has to flow into the personal tax return. That's adding significant expense. I'm just throwing them, even for a smallest S corporation, it's adding $1,000 expense right off the bat. So with that small business and that small amount of money, maybe we don't want to set up the S corporation right away. Second, with that small amount of revenue, and in this case, it is a personal service corporation. The income comes directly because of the individual's, in this case, professional licensed personal skills. There's little chance of having that counted as anything other than self-employment income or earned income under a corporation. So for those reasons, all reasons to not start the S corporation right off the bat. The good news is it's only August. We have until now to the end of the year. We can probably revoke that election, which is probably what I'll recommend. And then we'll talk about doing it again at some future time. Thanks for joining today for Daily Tax Minute. I'll be back tomorrow with another broadcast.